What happened in the stock market when Trump became president? Hey, everyone. Welcome back to DMMS Trading, the place where we break down the stock market, trading, and all things finance in simple terms. If you're new here, make sure to hit that subscribe button and ring the bell so you don't miss any of our upcoming videos. Today, we're diving into a huge topic. What happened in the stock market when Donald Trump became president of the United States? Now, Donald Trump wasn't your typical politician. His election in 2016 and his time in office from 2017 to 2021 were eventful for the US stock market. So, let's break it down step by step and see how the stock market reacted to the major events during Trump's presidency. 1. The Trump election victory, November 2016. Let's start with the moment Trump won the election in November 2016. Initially, markets were uncertain about what a Trump presidency would mean for the economy. Many investors were worried about his unconventional policies and unpredictable nature. Surprisingly, after Trump's victory, the market actually rallied. The S&P 500 surged to new highs, gaining over 5% in the days after his win. Why? The market was optimistic about his pro-business stance, tax cuts, and plans to deregulate industries like banking and energy. Traders believed Trump's policies could lead to stronger economic growth, and they were right in the short term. 2. Trump's first year, 2017. 2017 was a year of optimism. The stock market continued to rise throughout Trump's first year in office. We saw one of the longest bull markets in history, with the S&P 500 and Dow Jones hitting new highs. Investors were excited about Trump's promises to cut corporate taxes and reduce regulations. These moves were seen as beneficial to big businesses, especially in sectors like tech, energy, and financial services. One of the key drivers in 2017 was the tax reform bill, passed in December. This bill lowered the corporate tax rate from 35% to 21%, which was a major win for corporations. Investors cheered as many companies reported higher profits and stock prices soared. 3. 2018 volatility and trade wars. But not everything was smooth sailing. Fast forward to 2018, and things got a bit more volatile. This year was marked by concerns over rising trade tensions with China. Trump's decision to impose tariffs on China sparked a trade war. The stock market didn't react kindly to this uncertainty. The Dow Jones and S&P 500 saw significant swings, and the market dipped into correction territory multiple times throughout the year. Investors were worried that trade wars would hurt global growth and disrupt supply chains, especially for companies reliant on cheap goods from China. By the end of 2018, stocks had a rough year overall, but there was still confidence that the economic fundamentals were strong. 4. The Federal Reserve to 018 to 019. Another major factor affecting the stock market was the Federal Reserve. During Trump's presidency, the Fed raised interest rates multiple times in 2018, which spooked the market. Trump wasn't happy with these rate hikes. He criticized the Fed, even calling out then Fed Chairman Jerome Powell for being too aggressive. When interest rates rise, borrowing costs go up, which can slow down economic growth. It also makes bonds more attractive relative to stocks. As a result, we saw a lot of volatility in 2018. The market initially sold off in response to the Fed's actions, but bounced back when the Fed signaled they might pause rate hikes in 2019. 5 to 2019, recovery and record highs. Fast forward to 2019, and the market rebounded in a big way. The Fed cut interest rates 3 times in 2019 to support economic growth, and that sent stocks soaring to new record highs. By mid-2019, the stock market was on fire. Investor sentiment improved, as it seemed like the global economy was stabilizing, and the trade war with China was winding down. Trump and China reached a partial trade agreement in late 2019, which helped calm nerves. The optimism around trade and lower interest rates boosted stock prices, making 2019 a strong year for investors. 6. 2020, the COVID-19 pandemic and market crash. Then, in 2020, everything changed. the COVID-19 pandemic hit, and the stock market crashed in a way that nobody could have predicted. In March 2020, the US stock market suffered its fastest ever bear market drop, losing over 30% of its value in just a few weeks. The pandemic led to global lockdowns, businesses shutting down, and economic activity grinding to a halt. Trump, along with Congress, responded with massive stimulus packages. The Federal Reserve slashed interest rates to zero, and the government pumped trillions into the economy to prevent a total collapse. The market reacted positively to the government's intervention. By the summer of 2020, the market had largely recovered from the initial crash, driven by optimism around vaccines, stimulus checks, and low interest rates. 7. The market under Trump. So, what can we conclude from all this? Trump's presidency was a roller coaster for the stock market. On one hand, we saw strong growth early on, with tax cuts and deregulation boosting corporate profits and investor confidence. But we also saw volatility, especially in 2018 with the trade war, and in 2020 with the global pandemic. Ultimately, the stock market during Trump's presidency was driven by a combination of tax policy, interest rates, trade wars, and unprecedented global events like the COVID-19 pandemic. So, what happened to the stock market when Trump became president? Well, a lot of ups and downs. It wasn't all smooth sailing, but investors generally had a pretty good time, especially in the first few years of his term. The market was volatile, but it also had periods of significant growth. Will history remember Trump's presidency as a time of major stock market growth, or a time of uncertainty and volatility? That's up for debate. But one thing is clear, his time in office had a big impact on the stock market, and it's a story that investors won't forget. If you found this video helpful, make sure to hit that like button, leave a comment below with your thoughts, and of course, don't forget to subscribe for more in-depth trading and market analysis. See you in the next one.